Good evening and welcome to another edition of the ShadowTrader Video Weekly for Sunday, October 24th, 2021. I'm your host, Peter Resnicek from ShadowTrader.net. I was really excited to get the content together for this particular video because there's so much going on in the markets that I wanted to share with you. Obviously, the S&P 500 hit a new all-time high this week, but at the same time, Nasdaq is lagging by quite a bit, especially due to some FANG stocks that were very weak towards the end of the week, like Thursday and Friday. So we're going to get into the details of that. Beyond that, we're going to dip into market profile just for a moment, like we usually do, just to point out that a lot of those nuances that have been stacking up below us that are potentially bearish are still there, and we haven't corrected any of that activity yet. We'll breeze through the weekly options advisory. Also, very, very briefly, thank you, of course, to everybody who signed up to receive the emails all this week. If you received the emails, you were on that list, you'll know that we went 4 for 4 with new trades, so we'll talk about that a little bit. And last but not least, I will end on Bitcoin, because much like the S&P, Bitcoin also set a new all-time high record recently, and I'm going to show you where I think the pullback buy in Bitcoin is, and also where I think the pullback buy is in Coinbase. Before we get into all that, I want to just issue a very heartfelt and sincere thank you to everybody out there who has been following this channel since its inception. It just hit a major milestone this week that I wanted to share with you for the first time ever, and this just happened this week. We hit 50,000 subscribers. So super duper excited about that. 50,000 subscribers to the YouTube channel. Let's see if we can get it up to 100. I don't know, that would be great. In the meantime, if you're new here, hit the like button, please. And also subscribe to the channel so you will be alerted whenever I post new content. All right, let's get into the TA like we always do in these videos, always starting with the top, S&P 500. So obviously, new all-time high here where we have breached the prior, which was 45.85. So we've gone just a little bit past it. You can see here now the new high is 45.59. As the video unfolds and I talk a little bit more about market profile, you'll see that one of the things that I'm focusing on right now in the S&P is the fact that whatever pullback we had on Friday, whatever small amount of give back there was, for now it feels very much like it was a very minor liquidation break. You can see the candle closed relatively flat. There was a doji, but closed close to the open. And there really aren't any strong sellers participating in this market just yet. For a lot of that, in order to truly understand whether there are sellers in the market or not, obviously you can just look at the bullish chart that tells you things from one perspective, but to really get deeper into it, you really need market profile. And when I go into that portion of the presentation, you'll see kind of the proof, so to speak, that there really aren't any sellers in this market currently. Now, could they appear at any time if they like? Absolutely. Remember, next week is the big earnings week. We're going to get into that shortly. We've got a lot of big FANG earnings and some Dow names, etc. So sellers can appear in a market whenever they feel like it, but I'm a big believer that traders should do what works until it doesn't. That's a classic Daltonism. My mentor in the market profile, Mr. Jim Dalton, it's something that he always said, traders do what works until it doesn't. And I believe that that should be the MO for all traders. You should not be trying to anticipate some sort of bearish action in this market. You should wait for that bearish action to begin, perhaps develop a little, and then switch your bias into more bearish types of trades. So for right now, the upside is really where it's at. We've breached the all-time high by a little, and when we came up to that all-time high, the main takeaway is, for now at least, we haven't given back anything. You would think there would be a lot more sellers waiting in the wings there at that all-time high, but for now, they're just not there. Let's get into the Nasdaq 100. This is where things get a little bit more interesting. I've left the same Fibonacci on the chart from last week, and if you recall, last week in the Nasdaq 100, we were having difficulty breaking through two key areas, which was the 50-period moving average, which is the red line that you see here in the chart, and also the 61.8% Fibonacci retracement from the high to the low of the move. This week, the Nasdaq 100 did a little bit of show and prove, as I like to call it, in that it was able to break those areas and close a little bit higher. Obviously, in the bigger picture, the path of least resistance is still to the upside, and we'll see if we can get an all-time high. Now, that being said, the Nasdaq 100 actually is potentially going to be a little bit dicey in the coming week because it is the big week for FANG earnings. And I just wanted to put up this particular list. of what you need to be looking for next week, because so many of the big names are reporting. For me personally, this is my wheelhouse. Weekly Options Advisory mainly does trades in Facebook, Amazon, Apple, Google, Tesla, etc. All of those FANG Man plus T names. So it's a big week for earnings next week. Monday, Facebook is going to kick it off after the close. Tuesday is going to be Google and Microsoft, both as well after the close. Wednesday will bring us a couple of Dow names. No tech stuff, but McDonald's and Coke are going to be happening midweek. I thought I'd include them because they're big names in the Dow and potentially have a little bit of impact on how people feel about the economy, etc. So I added them. Thursday, it gets heavy again with tech again. We've got Apple, Amazon, Shopify, not officially in FANG Man plus T, and also MasterCard. I decided to put that one on list also. It's one that I watch as well. So next week, really hot week for earnings. Everything seems to be heating up. And what's noteworthy specifically about a lot of these names that I just talked about is that a lot of these names got into a lot of trouble already this past week. Some of the chart patterns are not looking so great. For every Tesla out there that looks fantastic, there is a Facebook and a Google, etc., that's just not looking so good. Let's take a brief tour through some of those individual charts of some of these stocks that are reporting next week in the FANG Man stocks, because I want to show you some of this relative weakness that has been happening over the past week. All right, let's begin with Facebook. So first takeaway from this chart, looking at it, you're probably asking yourself, what happened on Friday? I mean, huge, just ridiculously ugly gap down. Stock was in a downtrend for a while, but then was showing some signs of strength. Looked like it was breaking trend a little bit, but Friday's action just decimated that. Basically what happened was Thursday evening, Snapchat reported results, and there was some forward guidance talking about how maybe the advertising revenues were going to be a little bit weaker, pushing out to Q4, etc. And that basically took Snapchat stock down a lot, but also took all of the social media stocks and Google, because obviously Google is in the online advertising space as well, took them all down with it. So right now Facebook is obviously looking quite bearish, retested this low here. You can see also that in the run up recently that I was just talking about where it broke trend, notice that the key fibs that we look at, which are the 50 and the 61.8, it never even got to it. You know, we talked earlier about how the Nasdaq 100 had difficulty getting up to the 61.8 and then it breached, broke the 50 MA, etc. This is important to note because these are the exact type of signposts that you should be using in order to gauge relative strength or relative weakness. So let's say I was long Facebook long term. Not something I would ever do. I'm not that type of investor, but I would be looking at that sort of thing and saying, okay, well, the Nasdaq 100 has not only crossed the 50, it's crossed the 61.8, it's pushed through the 50 MA, but the stock that I'm long of hasn't even crossed the 50 yet, right? It hasn't even retraced half of the move from high to low in this particular bearish move. So that's important. So these are just little easy tips and tricks that people can use to figure out how relative strength, relative weakness works. Look at your stock relative to other stocks that are similar to it, and then also look at your stock relative to the index that it's a part of, where all of the rest of the tech resides. So look at Nasdaq 100, look at XLK, for instance, the technology ETF. That's the way that you want to basically gauge relative strength, relative weakness in terms of your stock versus everything else. Now, earnings are coming out on Monday in Facebook. Very, very important. So the question is, what am I going to do about it going forward? Those of you who have been following me for a while know that I never do anything going into earnings. Never, ever, ever. I don't do earnings plays. So I'm always flat all of these FANG Man plus T stocks as far as weekly options or equity before those earnings hit. But what is going to happen going forward in Facebook given this price action? Well, I'll tell you right now what I think is going to be the play in Facebook, closing at about 324 or so into Friday. Let me just switch this, if I could, over to a weekly chart. So on this weekly chart of Facebook, what I think is really important here is the 300 level. And I say that specifically because this was the exact area that Facebook had difficulty crossing for some time. These are now weekly bars, so you have a lot of time here. And when it reached the 300 level the first time, it basically backed off. And look at the amount of time that was spent here in trying to resolve that level. Facebook could never get itself back up above 300. And when it finally did, notice that it broke. And then when it pulled in, it spent multiple weeks using that 300 area as a strong support, which is classic technical analysis. This is like TA 101, is that old resistances become new supports. So this big round number at 300 is very, very important. So me personally, I'm actually looking, or I should say hoping, that the stock gaps down on its earnings on Monday to get us closer to that 300. And if we can get to that 300 level, I'll be watching very, very closely to see if that support is holding, getting really aggressive with the stock, and potentially doing some sort of a risk reversal or other type of bullish play, basically. I think that the implied volatility on a gap down in Facebook is going to be very pumped up. I'd probably be looking to do something like sell puts aggressively below that 300, maybe 280, maybe 275, wherever the premium still is, with the assumption that we're just not going to go there. It's going to have difficulty breaching through that 300, and then taking that credit that I receive and spending it on some sort of upside call structure. And I'd probably give that upside call structure maybe a 2 to 3 week duration, so that I can kind of really maximize any sort of move higher from that 300 that might occur. Moving on to Google, or Google as I call it, because that's the ticker. Not a lot to say about this one, except that it is just a whole lot of chop. The stock is really not moving at all. It's just a big sideways action. I've left these particular trend lines on here. They're from longer term charts. They're from the weeklies, but the support is really going to come in here. If it was to be lower, it's just over 2,500 and then just below 2,300. Obviously, as I said earlier regarding Facebook, no idea what's going to happen on earnings. I don't gamble on that sort of thing. I think it's too much of a crapshoot. But obviously, pointing out all of these FANG stocks to you that are reporting next week, talking about the relatively bearish patterns that they have now, in the context of the fact that I want to just talk about how these are going to have a lot of impact next week in terms of what happens to the Nasdaq 100. All right, let's wrap up these particular more bearish FANG plus T's with Amazon. Similar to Facebook, we had a little bit of strength in the stock recently that just absolutely fell apart. Keep your focus on this particular area right here. This big day here was about a week ago, was last week Friday. The stock had this huge surge. And for a moment, it looked like the trend was really changing, and the stock was stepping it up and doing something very, very bullish, because you have this downtrend line that's been in play for a very long time. And that Friday's action took you right to that downtrend. And then the next day's action started to break a bit higher. As we broke a bit higher and kind of went sideways, weekly option advisory, it wasn't an official call. Sometimes I do unofficial calls where I'll just put out, a trade idea that I'm in myself. I told people, I said, listen, you want to be short these 35.50 puts, because you've got, or calls rather, excuse me. You want to be short the 35.50 calls coming into this week Friday right now as I'm speaking to you, because it's going to be difficult for the stock to get up there. I could just see it struggling a bit. That turned out to be a great call. Those calls obviously went to zero, but more importantly, the weakness on Friday was really just staggering in Amazon, in that if you look at how big that move down was on Friday, the main concern is that the trend line that it fought so hard to cross here, it actually crossed back to the downside. So to me, if I was a medium term, say, swing trader of this, holding for that 5-day to 3-week period, this would be an absolute hands-off for me. I would just be looking at this particular pattern of breaking trend and then failing. Not good. It's just not something you want to be involved with. Just like every other FANG plus T, for me, the MO right now is wait and see. No idea where it's going to trade next week on earnings. But of course, as I was saying with Google and Facebook, big impact on the Nasdaq 100 potentially next week. So look out for that. All right, let's get into the market profile section of the presentation. This is where we get a little bit more granular, as I like to say, because we're going to look at nuances that traditional candlestick charts cannot show you. You can only see what I'm about to talk about using the market profile type of graphics that you see here. Don't be too alarmed if you can't see minute details on this chart. It's not what's important. You'll see in a moment when I go through what I want to talk about that you really just want to focus on a couple of key concepts. And those key concepts are virgin points of control and unfilled gaps, and maybe to a lesser degree, the concept of one time framing. So let's get into that. First of all, virgin points of control. As a market rallies, remember, it should come back in and test what we call points of control, which are the areas of high volume on any particular day. Wherever the most futures contracts traded on any particular day, that's the POC. That particular price level is the point of control. Markets should rally and then come back and sort of tag up. To use a baseball reference, they should come in and tag that point of control before moving higher. If they don't, it is a potential sign that the market is getting ahead of itself, and it's something to look out for. Put it into your narrative and sort of carry it forward. That's how we look at everything in the profile. We build a narrative every day, every week, and we continue to add these data points into our narrative. So right now, these virgin points of control are starting to stack up a decent amount in the markets. We now have 5 of them below us just since the beginning of October. So if I scroll a little bit on the chart, you can see here, wherever it says VPOC here, that particular line, that's 1. That's 2 from October 8th. Here's a third one, October 14th. And we keep going. We've got another one here, October 13th. And then the last one, but not least, is certainly down here at VPOC 10-6. So those dates that I just referenced, those are all days where the particular point of control for that day was never tested. When the amount of virgin points of control beneath us get greater than about 4 or so, it's something you should keep in your narrative and just be aware of. Basically, the market is running on strong momentum right now. As much as it can be bearish when prices come back down and retrace into these points of control, it's also a short-term bullish sign, which basically tells you that momentum traders are in control, the market is not giving back anything, and people are not waiting for pullbacks to buy this market. If people were waiting for pullbacks, then you'd see a lot more retests of those points of control, okay? Also, in a similar dynamic to what I just showed you in the VPOCs, what also happens in a market that is in the throes of momentum type buyers is that gaps go unfilled. In the market profile theory that I follow, remember, gaps are only the space between actual regular trading hours lows and then the prior day regular trading hours high. It has nothing to do with the settlement or the close, et cetera, et cetera. It's always just from low of one day to the high of next day if we're talking about a market that's going up. So in this particular situation, and again, looking from the beginning of October, we also have something to consider that we've got 3 unfilled gaps now beneath us, and those are the gray areas here. I've shaded them to make it really easy to look at. You can see 44.88 to 44.79, that's one. Then you have a smaller one here, 36 to 31, and then you have this really large one here, which is 43.90 down to about 43.65. Also, just one data point. Doesn't mean that these gaps have to fill, but all gaps usually fill eventually in the market, so keep it in mind. Big takeaway from this sort of analysis is that all of these nuanced areas give you targets and areas to shoot for if the market was indeed to, catch some selling and start to move down. This type of structure in the market, we call it poor structure, meaning virgin points of control, unfilled gaps, single prints, etc. There's a lot of it. There's a lot of nuance in the profile, but these are the areas that the market generally will drive hard down towards and repair. We call that repair when price action trades back down through these areas. Third concept that I wanted to talk about is the concept of one time framing. And I know it's not super clear on this chart, but if you've been watching the markets over the last week and a half or so, you know that we've never taken out a prior day's low at all, except for today, which is October 22nd as I'm recording this. The ES futures actually broke down a little bit intraday and took out the prior day's low by a few points. This concept is important of one time framing because going along with the same theme of everything I just talked about in terms of virgin points of control and unfilled gaps, it tells you that the market is potentially getting ahead of itself and it is definitely controlled by momentum buyers. Now, that being said, one of the key takeaways that I had personally from Friday was the fact that the market had every opportunity to move lower Friday and it didn't. Think about this psychologically. If you were long this market from starting way back down here, you had all those 7 days of profit or whatever, I would have to imagine that a lot of people should be trailing their stops below the prior day's low. When the S&P moves below the prior day's low, that's where they're going to be out of their positions. That simply didn't happen. And that's really a feather in the cap for the bulls going forward, is that as far as right now is concerned, obviously the situation can change. Next week is the big earnings week, etc. But as of right now, the market had every opportunity on Friday to move lower. We had a cessation of one time framing where Friday's daily RTH action, regular trading hours only in the ES, did break down a little bit below the prior day's low, but there were no sellers to be found there. There was no added momentum to the downside, nothing. New sellers did not emerge, and the market actually closed here at the, if you can see the red square, kind of in the middle of the range on Friday. So again, all of this, every single thing I'm talking about, each individual nuance is just one data point. It takes a lot of data points put together to create a trend or to create a bias. But I really like sharing this stuff with you because I feel it's extremely important to get a better idea of what's going on under the hood. And as I was saying, a little bit deeper than just traditional charting. If this type of analysis is something that you might be interested in adding to your repertoire, hit the little link right up there in the corner. I write a newsletter about this every single morning called Peter's Pre-Market Perspective. Really reasonable. It's $1 a day. It'll cost you $20 a month. And I send you snapshot of the profile every morning along with the key levels, a commentary, and more importantly, scenarios of how I believe the day that's about to start could potentially play out. I send that to you every morning at 9 a.m. Eastern sharp, so you've got 30 minutes to digest it. And I do offer a 5-day free trial on our site. Just hit that little link that you see up there in the corner of the screen and check out the Peter's Pre-Market Perspective and get a little bit of deeper knowledge on what's really going on in the futures market under the hood. All right, brief tour through Weekly Options Advisory. Thank you so much to everybody who signed up at that link that I gave you last week to receive my nightly recap emails of all of the activity that went on in this particular advisory this week. If you were looking through those emails, you noticed that we went 4 for 4. We put on 4 new trades this week, 4 trades this week that actually expired this week because it is a Weekly Options Advisory. We did put on 2 more new ones beyond that expire next week. We have something going on in Coinbase and also in Tesla. But as far as what we put on for this week, we went 4 for 4 and we did something in Netflix, which was a winner, and we did something in Facebook, which was a winner, and then we also did a nice one in Amazon, and we had a big one in Google as well. Big takeaway from these particular trades is the fact that they were all bullish. They were all bullish biased. And yet I just finished showing you how Facebook and Google, for instance, and Amazon, they all completely fell apart. Well, you got to be nimble is all I have to say is, this is what I do for my subscribers. I am 100% on the job every day, all day. And if we're in a call structure like this and we've got profits on the table, trust me, we are not looking at options as a binary event. We never do that. We are harvesting profits as we go, and we're always trying to anticipate and watch very closely to see if a situation is changing or if a stock is about to fall apart. And obviously that really proved very good for us this particular week because these stocks absolutely just got killed into the end of the week, but we were out much earlier with some solid gains, as you can see. All right. If you'd like to join this advisory, real easy, just hit that little link up there in the corner or go to this link here, shadowtrader.net/options. Very reasonable. $49 a month. Never a contract. I send you trades straight to your phone. You can cancel anytime if you don't like it. You also get my What's Peter Thinking audio messages throughout the day. I go live multiple times throughout the week in our pro trading room environment where we do live private webinars for everybody, question and answer all the time. Just really a huge value. The Peter's Pre-Market Perspective Market Profile newsletter that I mentioned a moment ago, that's actually included. If you have a subscription to this, I give you that for free. So really one of the best deals out there on the street. And again, if you'd like to join us, hit the little link up in the corner or the URL that you see on the screen. And I hope to see you there. And last but not least, wrapping it up with Bitcoin. Also a new all-time high. As you can see on the chart here, $68,515 per coin. So what is the next move? Me personally, I think that a pullback that is buyable is in the cards since we had a huge breakout here from the 60,000 level. Pretty simple TA. I'm looking for a pullback to that 60,000 level. I think that the actual support could potentially come in just a little bit below. If you look at this particular line, It's about 58 to 58.5, and you can see there was multiple days here where you had difficulty crossing, and then you finally broke, and then this big expansion of range took you up over the 60,000. That's my my limit order sitting there for one contract of the Bitcoin futures. As you know, these are extremely volatile, also extremely margin intensive. It's about $200,000 just for one contract. So I usually just start with one, and on weakness, I'll add another one. Most I would go on something like this is maybe like 3 total, because obviously, you know, it's a lot of buying power and it's a very volatile thing. But I do have a limit order sitting there here just over the 60,000, because I think sometimes what happens with these things is it's a self-fulfilling prophecy and everybody's looking at the same level, and you don't often get a touchdown right to where you want it. You'll sometimes get a low that's a little bit above it. So I'm starting a little bit above it. I would buy more on a dip below 60, keeping in mind, you know, this all-important 58. I think that potentially could be the near-term floor in terms of a Bitcoin pullback. And then after that, once in the position, obviously I'm looking for a move a leg higher, but first I want to see this trend line here break, and that also could be an add point, and maybe a situation where it's just buy a contract here, no need to buy a contract lower, just see what happens, maybe just wait for the trend line to cross and have a buy stop there. When the trend line crosses, buy stop there. First target for me would be the midpoint of the move down, so depending on how far down it goes, I'd be looking for at least a 50% retracement of that, going to say, you know, 64, 65,000, and then to see if we can make a new high towards the 70,000 mark. And if you like Bitcoin on the pullback, then you gotta like Coinbase, obviously, right? Coinbase pretty much trades with Bitcoin. It was very, very strong on Friday, or I should say very kind of minor pullback on Friday. It was a lot stronger. As you can see, I'm already long the stock now. On the pullback, I've been accumulating. I think I started at 300 and then again 295 something. So I got 1,000 shares now. I am bidding for another 1,000 actually below. If we can get down closer to the 290 level, I would add to the position. Chart-wise, it looks fantastic. There's a couple of really important things I want to point out on it. You had this resistance level here that in this week's action broke. Again, classic TA. We're just talking about a lot of classic TA in this particular video in terms of old resistances becoming new support. Notice how when the stock came down, where did it stop? Right there, just below the 300 level, right where the prior action was. More importantly, a dynamic that I'm looking at in Coinbase that I absolutely love is actually right down here on the chart. Look at the volume pattern. Everything was just kind of bumping along at this volume level right here until the breakout. And then boom, look at how the volume just absolutely increased. And then the last 2 days have been pullbacks, and look what the volume did. Completely decreased. So again, classic TA, simple stuff. You want to see more volume on the upswing, a lot less volume on the downswing. I think it's going to follow Bitcoin regardless. I'm looking for more upside in Coinbase. I'd like to see the stock make a new high past here. But as you can see here, I am long shares right now, and I am looking to accumulate more shares if we were to go lower. Weekly options advisory, I also mentioned this was one of the trades that we put on Friday the 22nd. We actually put on a risk reversal. We did a put structure that had some shorts around the 270 area. It was an unbalanced put butterfly. And then we spent that money on a call structure buying, I believe it was the 305, 315 call vertical all for next week. So definitely bullish on Bitcoin on the pullback, and also bullish on Coinbase as well. And that's all the analysis that I have for you this week. So let's just do a quick recap of some of the key points that we discussed in the video. S&P 500, new all-time high, not backing off at all. Had every opportunity to back off on Friday, didn't. Nasdaq 100, lagging by a lot, mostly because it's being dragged down by some key names in FANG. Facebook very weak, Amazon very weak, Google very weak. More importantly, all of those names, plus Apple and others, reporting next week. I believe that this is going to potentially alter the trajectory of the Nasdaq 100 in a big way. So we will wait and see what happens with those stocks. All right, market profile. Remember, a lot of those nuances are continuing to build underneath us. A lot of bad structure. So far, the market completely ignoring it. Momentum traders still in play. We'll see if next week's earnings action changes that at all. And then looking ahead to early November, very important, I've been saying this, that's a Fed meeting, November 11th. Not sure what's going to happen now with the taper, because I don't know if you noticed, but Powell was speaking today, Friday the 22nd, and now he's saying, potential for taper maybe starting early 22. So honestly, I don't know. I'm just always a big believer that similar to earnings, I generally tend to have less things on as I come into these every 6-week periods for FOMC, but we'll see what happens on November 3rd. Obviously, we'll have another video between now and then, and we'll see if there's more taper talk or if indeed there is going to be any actual start of tapering of bond buying, or if, like he alluded to today, they're going to be pushing that out further once again and maybe waiting until 2022, all right? On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading, good night. Smash the like button, subscribe to this channel. Thank you so much for spending just a little bit of your weekend with me, and I'll see you on next week's video.